Ladies and gentlemen, welcome to the Motivate Property Podcast. It is Wednesday, the 4th of February, 2026. I hope everyone out there is having a fantastic week. So guys, this week we are going through some of the news updates really around the property market here in the country, right? I know the fact that this is obviously we've only just hit February of 2026, and already we're pretty much seeing signs across the board, across the media, across the market, that there really is no signs of the market slowing down anytime soon, right? I have been getting this question a lot from people over the last couple of weeks about, what's going to happen in 2026, what's the year going to look like, what's going to happen to the market, what's going to happen to, this particular property or this particular area. And look, to be fair, guys, as you know, no one has a crystal ball. We're making our absolute best guesswork. However, when we understand the mechanics of property, the fundamentals and really the leading indicators and the lagging indicators, it can be quite simple and easy to actually sort of predict what's going to happen. But just a little disclaimer, no one has a crystal ball. Everything that I say today may not happen or could completely change tomorrow. But this is sort of my perspective and my opinion and my thoughts about where we're going. So, firstly, go back to 2024, May of 2024. This is when the federal budget came out talking about how, in the budget in 2024, they were going to basically, under the Housing Accord, build 1 million homes in Australia, or have 1 million homes built in Australia by 2030. And that was going to be, Labor's way of, fixing the property market, which obviously they haven't done. Now, just to give you guys a quick update with that, because really what we're talking about now is the government intervening and trying to help supply housing to the market. To say that that's failed, I think would be an understatement. And just to bring some reality to my statement here, let's go through some numbers. So 1 million homes by 2030, meaning they would have to build 240,000 homes per year. Now, when I say they, it's not the government physically building them, but it's basically the government doing what the government does and trying to either use regulation or incentive to try and incentivize those sort of houses being built. Long story short, we needed 240,000 houses per year. So far, the last 2 years, we've struggled to punch 180,000. Right, so we're 60,000 houses short 2 years in a row. So we're already basically half a year behind at 120,000 homes, which is half of what we need in a year. So I guess the first thing to say with this, let's take, from today in 2026 to say 2030. Let's just look at the next 4 years. The market, as you guys know, is a function of supply and demand. All right, supply is how many new houses are we adding to the market, not how many established houses are out there, because they're already out there, right? The market's where the market is. The seesaw is where the seesaw is. The question is, what is getting added to tip the scales on the seesaw? So when it comes to supply of housing, it is new constructions. How many new houses are we building to add into the overall pool of houses in the country? When it comes to demand, we're talking about people. How many people are we adding to the market? All right. So when it comes to the supply of housing, like I said, we're struggling to build 180,000 homes. When I say we're struggling, we're hitting 180,000 homes, but the market, like the industry, the building industry, the construction industry is sort of working in overtime to get that done. And somewhat, how do I put this politely? It's somewhat bending over backwards in order to hit these marks. So this is not done, like this 180,000, I guess what I'm saying here is they're not doing that easily. All right. Let me give you guys an example of this. So obviously, a lot of our clients, they do start off with construction. A lot of our clients, might go down alternate pathways, but, obviously I've got my head in the construction game as well, right? Not just the real estate side, also in construction. Now, obviously with that, it means that I've got to know builders. I've got to know, people out there in the industry in order to make this work. But I've got builders and building inspectors for that matter, who've been coming to me and telling me about how they're seeing, let's just say, teams of labourers and workers hitting some of the construction sites, at around 10 o'clock at night, starting to do their work, all fresh off the boat from another country, can't speak a word of English. And these are the guys who are now here essentially helping build the homes. I don't know about you guys. I don't think that's a great recipe for success long-term for us, right? I really don't. I think this is, again, more Band-Aid solutions than not actually fixing the real underlying problems here. But firstly, when it comes to the supply of housing, guys, like we are struggling to build the houses we're currently building, right? And we need more of them, right? We need substantially more of them every single year, and we're failing at that, all right? Again, we don't have the funding And when I say we don't have the funding, we literally need more money from the banks. We need more borrowing power for the average person. We need more people going to lenders and being able to buy and purchase more houses to go and solve the problem, firstly. Secondly, we don't have enough skilled workers, right? So there's not enough skilled trades in the country, right? So right now, a part of the tactic, and I did see a video, I'm not sure how real this was, but there was a video I saw, end of last year. I believe it was one of the bureaucrats, I think it was, I want to say he was one of the economic bureaucrats in the Indian government, right? So India.
If you're overwhelmed by property investing, you're not alone. Most people waste months researching the wrong suburbs, stressing over inspections, and second-guessing every decision. Motivate Property cuts through all of that. We analyse the data, shortlist the strongest opportunities, inspect on your behalf, and negotiate so you don't overpay. The result is simple: a property that actually performs and moves you closer to financial freedom. Learn more at motivateproperty.com.au.
Essentially saying how, the Australian government's come to us and says that they need a lot of construction workers. So we want to send, millions of our workers over to Australia to extract as much knowledge, as much resources as we can, so we can bring it back here in India and we can benefit our country after learning all of the Australian, tools and tips and tricks. And again, looking as an Australian saying that, it like, that guy was talking with dollar signs in his eyes, right? He was talking about essentially, mass migrating a shitload of Indian workers over here to come and basically extract, a lot of our resources and take it back to India, right? So as an Australian hearing that, like, I don't really feel okay with that. Like, I don't think that's a great move. And again, if we're now going to assume that we've got, these workers who have subpar qualifications come into our country where we've got much higher standards, are now going to go and start, building all these homes for us because they've got the tick of approval on a certificate, and yet they're building substandard homes. Again, I don't think that's going to be a great thing long term. All right, but again, we don't have enough skilled workers. There's too much regulation. All right, so the regulation in the construction and the land development industry is way too high. So again, in terms of new builders entering the market or new developers entering the market, the red tape is just pushing them out. It's not viable. You've also got to consider taxes, right? Particularly the GST. Right, so GST is obviously a tax that's on every single transaction. Now, when you think about, let's just say digging out sand from a mine site, all the way through to processing, cleaning that sand, then getting that sand onto a job site, you got to consider the sand itself has gone through multiple transactions, right? So from the original, let's just say mining worker paying GST for his vehicles and equipment in order to get that sand out of the ground, all the way through to transporting it, all the way through to refining it, cleaning it, all the way through to transporting it to a job site in order to be used as a product, let's just say to start mixing cement. You got to consider if that's gone, if there's been 5 different hands that's exchanged, that's 5 times we've had 10% GST stacked on top of it. So the amount of money in our building costs today that are literally just for GST and taxes, right? And it's not just GST, but taxes in itself. Again, like, if we want to actually fix the market, we need to start stripping out of these taxes out of the construction industry, right? And I'm not saying we just remove taxes. What I'm saying is we look at the overall system, we remove layers of the tax. Don't remove it all. Like, obviously the government still wants tax and they're going to get it either way. But if we start removing this double dipping, or what I see as kind of double and triple dipping here, like, this is a way to make housing more affordable. More people can afford to do it. More people do it. We now start fixing the issues, right? So, again, when it comes to skilled workers, regulation for land, regulation for builds, and then we think about taxes, there are a number of reasons why the construction industry and the supply as in property as a whole is really struggling right now. All right, I've got solutions, but unfortunately, the bureaucrats on the East Coast, it seems like they're doing their own thing or doing it their way. All right, but we'll see. Now, one thing that I do project, right, and this is not just this year, but this is going to be within the next couple of decades, and this is, again, me with my crystal ball, based on the leading indicators of housing construction population growth right now. Here are some things that I'm anticipating that we're going to see. Firstly, I anticipate smaller housing sizes, more units, more apartment buildings, more townhouses, more small developments. I believe that we will continue seeing our housing or our average housing sizes continue to shrink over the next couple of decades. Again, you go to much older, mature cities. You go to places like, China's a different example because their population density is ridiculous. But if you were to go to, say, for example, I was in Manila over Christmas, right? So the Philippines, most densely populated city in the world. It's all apartments, right? No matter where you're going, you're basically, living in an apartment. Otherwise, it's walking out really living, right? You go to places like China, right? You go to any mature older city, basically the norm is apartments. Now, we are still living in a culture right now where houses are the norm, right? That's not going to be the case. I don't think it's going to be the case. And I think, I think that we're going to start seeing an end to that within sooner rather than later, just purely based on prices and trying to fit more people into the same sort of square kilometres of what the Perth metro area is or Australian cities. Secondly, our listings and this is specifically for WA, but our listings hit a record low in December of 1,881. So what that means is out of the pool of established properties that already exist, 1,881 of them are for sale. Normally, we have around 15,000 in a balanced market, right, for sale at any one point in time. So for the fact that we've got 1,881, which is a new record low, just goes to show that right now, not many people want to sell a house. Right? Not many people want to liquidate because obviously they know the prices are going up. I mean, why would you want to sell right now if the price is going to be another 10% by the end of the year, right? So, again, this is more a symptom of not as many people willing to sell, but we've got a huge amount of demand, and I would imagine that most of those sales happen in a pretty quick time frame, all right? But again, it's just another symptom of the fact that we've not been paying attention to our housing supply, which is obviously becoming an issue. Now, REWA is also projecting, and I've seen this from Domain as well, they are projecting another double-digit growth here in Perth. In fact, they believe that Perth is going to receive again in 2026 the largest capital growth in the country, like we did again last year, and I believe the year before that. So again, this is fairly typical for this phase of the cycle. I'm expecting this. I would say we're probably going to hit another 10 to 12% this year in terms of median. I would also say that we're going to see some surging in units and smaller dwellings, because obviously they're really the more affordable nowadays. I also do foresee that the regional towns are also going to start taking some good growth as well. And this is essentially people starting to migrate out of the CBD and out of the metro and move into more affordable lifestyle locations, right? Generally speaking, when a city booms, what we generally find, a few years later is obviously the outer rim starts to boom, smaller dwellings start to boom, and then the regional towns start to boom because people start, moving out of the hubs. So I will make a sneaky little projection here. I believe that we'll probably hit 10 to 12% capital growth this year in 2026 for Perth. And obviously East Coast, I don't foresee Sydney hitting double digits. In fact, I probably only see Sydney growing at around 3 to 5%. I do believe that Brisbane, Melbourne and Adelaide will also hit double-digit growth. Again, that's just my personal opinion, just purely what the market's doing and the over leading indicators. That's my predictions for 2026. Now, when it comes to demand.
If your investment property is being managed, but you're still dealing with stress, vacancies, or tenants who don't respect the home, you don't have a property manager. You have a problem. Motivate Realty runs property management the way it should be done. Clear communication, strict tenant screening, proactive maintenance, and complete transparency so your property stays protected and your rental income stays consistent. If you want a property manager who actually treats your investment like a business, visit motivateproperty.com.au/realty.
So keep in mind, the ABS has just updated their data as of December. We had population growth, net population growth of 420,000 people and that was up to June of 2025. So July to June of 2025, July 2024 to June 2025, 12 months. 420,000 people, all right? So consider we're building 180,000 homes. We've got population of 420,000 people growing. We don't have enough houses, all right? And that's really the fundamental problem. Now, again, we could turn around and say, hey, look, let's just pause immigration, all right? And that would obviously help sort of balance the market pretty quick. But obviously the government's not doing that, right? I mean, we need more skilled workers. There's some fundamental needs of our economy outside of housing. So I understand why the government's making this decision, right, in terms of bringing in more people. However, I do have some feedback on the types of people, the qualifications of the people, the level of skill of the people is probably something that I would be really questioning if I was one of those bureaucrats. But at the end of the day, the population in the country this year, I imagine, is probably going to hit something similar again. But fundamentally, if we think over the long term, Australia is the most sparsely populated country in the world, right? So what that means is there's less people in Australia by land mass than anywhere else on the planet. Because of that fact, I believe that our population is primed to have a huge amount of growth over the next, say, 100 years. Also, adding on top the fact that we're a Western developed world, we're very safe. Our economy is very tightly regulated. Like, money is safe here, investments are safe here. It's not like, you're investing in Mumbai or Nigeria where there's scammers hitting up every 3 weeks about, getting money from a prince who's a cousin. The point of the story is I do believe that over the next 100 years, Australia will have the lion's share of population growth by percentage out of all the Western countries. Now, again, this is also what we've seen over the last 100 years, right? The Australian population by percentage has grown a lot stronger in the last 100 years than most of the places around the world. I believe that trend's going to continue. Now, again, yes, I am standing here today in 2026 as an American Australian. I was an immigrant. I moved here from America. So again, not saying that I'm not pro-immigration. I certainly am. But the fact of the matter is the average Australian today is not Australian. All right. And that's a fact that most of us have to grasp. The average Australian today is not Australian. They are very likely first generation, right? And this is just looking at the stats. So the reality is, with that in mind, I believe that the population will continue to grow at the same trajectory, if not more, because of the way that obviously things are going to compound over time. That in itself is the inherent demand for Australian property. All right. The reason why you could buy a house in the 60s for $8,000, right, in the 70s was $15,000, in the 80s was $40,000, in the 90s was $100,000, 2010 was $400,000, right now it's almost $1 million. The only reason why that's happened is because the population has continued to outstrip the supply of housing. All right. So again, the writing is on the wall, guys, right? When it comes to the leading indicators of population growth and housing construction, I do not see a reason why our trajectory is not going to continue doing what we've been doing unless something really drastically changes, which is just not. All right. The powers that be, there is too much incentive right now for things to change. In other words, the guys in Canberra are getting fat and happy. Why would they change this, right? There's just zero incentive for them to do that, considering that obviously bringing people in is a lot of benefit to the government. I mean, there's more tax revenue. It soaks up inflation via quantitative easing. There's a number of benefits of bringing in a lot of people. Obviously, us as the people in society, obviously there's some problems with this, particularly in Victoria where let's just say they unsuccessfully implemented some machete bins because some of the immigrants weren't assimilating into the country. And I'm not going to say much more beyond that. But the reality is, guys, like, the government is very much incentivized to continue importing people. Very much incentivized. Now, again, as property investors, this is a good thing because it means that you're making more money. Socially, not a great thing, right? Because obviously what comes with that, particularly when people don't assimilate, there's obviously more crime, more terror, more social problems. But that's for a different podcast. Now, one other thing that I am going to predict, I would say across the next 3 to 5 years, we're also going to see more laws being implemented in favour of tenants and not landlords. And again, this is now the fact that we're moving into a world where most people will be renting very soon, right? Now, keep in mind, we are in a culture, we're in a very young culture here in Australia where everyone buys a house and it's normal. In our lifetimes, that will not be the case, right? As housing prices get further and further out of reach, wages will not keep up. Wages and property prices aren't correlated and have never been correlated, guys, right? That's one misconception that you need to just put in the bin, all right? Forget about it. Median prices are going to continue growing. Wages will not keep up. The banks will just create different products like extend loan terms and shared equity schemes and a bunch of different things in the future. But the point of the story is you go to more mature cities, London, New York, Paris, Barcelona. You go to much older cities, most of the locals rent because they've got these massive populations, X amount of infrastructure, supply and demand. Those cities, it's the norm for people to rent, right? It's not normal for people to go and buy a house, right? First home buyers buying an apartment in Manhattan is not normal, right? So consider that we are currently heading in that direction at a very fast pace. So one of my predictions over the next 3 to 5 years is we will see more laws in favor of tenants, and that's tenants being able to make more changes, do things to the house, have more freedom and flexibility when it comes to breaking leases, being able to negotiate rents or change, rents or request changes in rents. I think that these are some of the things that we're probably going to start seeing. But again, the overall view is that the trend will move towards favoring tenants over landlords. All right, we'll see if it happens, but mark my words. Now, one thing that happened yesterday was obviously interest rates. All right, so this is a bit of a frustrating topic, if I'm completely honest with you. So obviously, the RBA has increased interest rates because inflation has grown higher at a higher rate than what they were planning. I think when I read it was around 3.6, where target's around 3. Now, for those who are long-time listeners, I mean, I've probably spent a good 20 podcasts talking about interest rates and really, how moronic using interest rates to curb inflation really is. And I'll explain what I mean. This is more so for the new listeners. So for the new listeners who don't sort of understand what this means, the RBA essentially controls money, right? They control the banks. Now, when I say they control the flow of money. Now, what the RBA does is they have a mechanism where they get to control the interest rate as a means of being able to control, slow down, or speed up the economy. All right. Now, when we think about interest rates fundamentally dictate the cost of money. That's what it is. It's the cost of money. Every bank sell you a product and it's money. They all sell the same shit. Right. Now, I know sometimes we get in our little tribal mindsets of, this bank's better than that bank, or this bank has a nicer app than that bank. At the end of the day, guys, they're all selling the same product. They sell you money. That's what they do. And yes, to be clear, I have done a podcast on this before around fractional reserve banking. Yes, the banks, the entire thing is a giant Ponzi scheme, right? It's all smoke and mirrors, right? The entire thing's a con. It's a scam. However, just notice that this is sort of the world we're living in, right? So I'll acknowledge the fact that the bank system's a scam, but then I'll also play the game as if they're also a scam, all right? So I'm using it to my best ability to benefit me and our clients rather than, line the bank's pockets. Having said that, and the reason why I say that is because we have to really understand the purpose of what banks are and what they do. Now, the reason why I say they're a scam is the entire thing is built off, we're told it's built off gold, right? And gold reserves, right? So what that means is money traditionally is backed off, gold, which is the oldest known currency. However, nowadays it's not really built off gold. It's backed off technically American dollars, which was backed off gold, but now it's backed on the American military might, right? Which is a whole other issue in itself. The point of the story is the banks and the RBA dictates the cost of money via the interest rate, right? So when interest rates go up, right, what they're doing is they're making money more expensive. So businesses like ours, we can't really expand anymore because interest rates have now increased. It costs more money to go and expand. Probably not feasible, right? So that's one way to slow down the economy and slow down booms. The second thing that it does is by increasing the cost of money, it makes borrowing power lower, right? So obviously as interest rates rise, you can borrow less and less and less. And so what it actually does is curb lending, right? Now, why is that important? It's important because to understand what causes inflation fundamentally is the printing of more money, right? The more money that's flowing around our economy, the less that money's worth, right? The more money that's flowing around our economy, that's when we see the markets grow, but also inflation also grows. Now, when we consider that printing money is what causes inflation, we've also got to consider that we don't actually print money, right? Now, what I mean when I say that, if you think about all the money in the world, I think we've got like 3 to 5% of it in actual real cash. The rest of it is literally just numbers on a screen. Like it doesn't actually exist. Like it's fake, right? And so when I say, inflation is caused by printing money, like it's not physically the RBA printing like $100 notes and then there's too much of those $100 notes flowing in the economy. That's not how it works. How it works is with debt. So when you go to the bank and you borrow money and you give them a deposit under fractional reserve banking, they are required to keep a fraction of that money in cash. But what they do is then they just create an account of negative $400,000 or $600,000 and that's your mortgage. They physically create an account, they create a debt, and now you're going to spend the next 30 years repaying that debt 2.5 times, right? So if you borrow, say, $500,000, you're probably going to pay back around 1.5 million roughly, right? Plug this into Google, look at online mortgage calculator, you can plug in numbers yourself and have a look. The point of the story is that money doesn't actually exist. They've just created a debt of $500,000, and then they have a license to now charge you interest on that money. So the point of the story is every time someone buys a house, there's more money that's just been created and added to the market. That's what causes inflation, right? So again, as the banks increase interest rates, they're trying to slow that down to try and curb inflation, right? And the opposite is when they lower interest rates, money now gets really cheap, people can start expanding, and I can go and borrow more money, buy more houses, and that's how the markets sort of boom, right? So really the RBA, they're trying to stop really big booms, because bigger the boom, the bigger the crash, and they're trying to stop crashes. What they want is they want a slow and steady rise that doesn't have these really big swings and troughs. And in theory, I completely understand that. But my problem is, and where I've been coming from, is the fact that the RBA is using that one mechanism to try and curb inflation nationally, when we have 8 very different independent markets moving. So again, just to be clear, I understand right now the country is going through a boom. We've got record high share prices, record high property prices. Interest rates are still pretty low, even though they've just increased. They're still half of what they normally would be. And what I mean when I say that is the median interest rate is around 7%. We're sitting around 3.85, right? So at the end of the day, there is an argument that we sort of should be increasing interest rates to try and slow down this boom. So it's not a massive boom and a massive bust. So it makes sense in theory. But the problem that I have is we need more funding and more houses in Perth. So in WA specifically, we need to be lowering interest rates and helping people get into the market and build more houses. Whereas in Sydney, they need to be raising interest rates to slow the market down, because it's 1.7 million median house price. And they need to slow that market down and kind of keep it down to make it more affordable. So the point is, Perth and Sydney are the complete opposite sides of the spectrum when it comes to what the property markets are doing. And so if you're going to use interest rates as this one blanket thing that's going to impact every market, to me, that's sort of insane. This is, I would expect this if we didn't have a fucking internet, right? Today with the technology that we have, the amount of information that we've got, the amount of control via the internet that the banks have, the RBA has, that the government has, the fact that interest rates still to this day are a national metric is absolutely freaking insane to me. They need to make this, and I've been saying this for years, they need to make this a state interest rate. So for WA, the interest rate's going to be this. We need to lower it because we need more houses. For places for example, say Canberra and New South Wales, they need to increase interest rates to slow the market down, right? Anywhere they're going through big booms, that particular city, right, is booming, but most other cities aren't. That one, we need to raise interest rates. The other markets to stimulate the markets, we need to lower interest rates. That to me makes way more sense. And I just want to reiterate, I'm not an economist, right? I don't have an economics degree. I shouldn't know this shit. The fact is, on the East Coast, the RBA, these are supposed to be the smartest, best, economists in the country. And just notice, year on year, they're doing the exact same thing, making the exact same mistakes, creating the exact same problems, flow down effect problems. And notice how in 2026, we have such a critical shortfall supply of housing nationwide, and none of their policy making has been making a difference.
Whether you're buying your first home or third or fourth investment property, Motivate Finance Team has you covered, finding the best lender to fit your needs. And here's the truth. If you haven't reviewed your lending in the last 12 months, you're probably overpaying. Banks reward new customers, not loyal ones. We review your structure, compare lenders, and build a finance strategy that actually supports your long-term goals. Whether you're refinancing, upgrading, or building your portfolio, your lending setup matters more than you think. Visit motivateproperty.com.au/finance to get started.
Guys, it is absolutely freaking insane that this is the reality. This shouldn't be, right? Now, yes, I'm resisting reality, kind of pointless, but the reality is, guys, the government is not making this better or easier. Let's just say that. In fact, because of the government's mismanagement, I'm getting wealthier by the minute. right? And anyone who are our clients and been investing in property over the last couple of years, by the banks increasing interest rates right now, what they're doing in a tight, undersupplied market is they're continuing to chokehold the supply of housing. Now, yes, in theory, if the banks increase interest rates, right, it should help house prices come down a bit because it's supposed to, slow the market down. Sure, if we're in a balanced market. We're not in a balanced market. We're in a critical undersupply of housing. So the fact of the matter is, by increasing interest rates right now in such a shortfall supply of housing, all you're doing is essentially putting a chokehold or a barrier to people actually being able to get more money to go and supply the houses, particularly, say, in the areas that we're shortfall of housing. Perth, Adelaide, there is an argument right now in Darwin and Tasmania a little bit as well. But the point is like right now, because we're in such a shortfall, this raising interest rate is just going to push house prices higher. Mark my words. And again, to be clear, I actually make more money when this happens, right? Our clients make more money. Like anyone who's investing in property is going to make more money because of this. However, I don't think this is a good thing long-term for society. And this is where, I guess my ethics between being a cold-hearted capitalist in one hand, but being an empathetic, I do try and be empathetic and compassionate on the other hand, and try and, I do have to balance these with my own sort of morals. I guess the point is, the government's mishandling right now is making me wealthier, but it's going to make society worse. And I don't think that's a very good outcome, because you can still make lots and lots of money and you can still have a great society at the end of the day. There are ways to make that work. It's just that it seems like right now, from a government perspective, they're focusing on one or the other, not both, right? It's like short-term Band-Aid solutions that create bigger long-term problems that they're going to have to go and address at that point. I'm not going to say that that's done by design, but there is an argument it's done by design so that the government can continue expanding in the future and make more money. But that's another conversation. Now, one of the things that I have seen in the last 24 hours, right, and this is essentially the pressure now on Jim Chalmers, our treasurer. So, obviously, our budget has been blown, right? So we're fairly. I think it's fair to say that there's been a pretty good case of mismanagement of our overall budget. From the stuff that I'm seeing in the news, and again, this could be completely, what's the word? I could be a little bit early on this, guys. So this may not come to fruition. This may just be a little, one of those articles that's trying to create fear, like it might not actually happen. But two of the things that I've seen this morning being talked about now by Jim Chalmers to bring the budget back in line is reducing NDIS and potentially changing or removing the capital gains tax discounts, right? So let me explain what those two things are. The first one is NDIS, the National Disability Investment Scheme. Basically what happened a couple of years ago, this is going back in, I want to say 2017, 2018. There is obviously been an increase in the overall population who are disabled or special needs. So in order for the government to fix this, and to be fair, guys, I thought this is actually a really good thing, because this is an example of what should happen. The government turned around and said, hey, you know what? We're going to provide tax breaks to investors who go and build us some SDA homes, so special needs, special needs specification homes. So I'm talking things like, for example, when you walk in, you walk into your door, there's no lip so that wheelchairs can just go straight through. In the showers and wet areas, there's like handrails, right? So that's just some very basic stuff. Like there's certain width of the hallway so that way wheelchairs can go back and forth with no problems, right? So again, kind of some minor tweaks on what we would otherwise consider like a normal specification house, but more so designed for special needs. So the government implemented a bunch of tax breaks and incentives for that scheme. Now, like all good schemes, straight away there was some, let's just say some silly buggers who went and started playing some silly buggers. Now, what that means is you've got different levels of NDIS, right? So you've got your normal, like let's just call it tier 1, right? I can't remember the terms, but let's just say tier 1. Tier 1 is no like flat surfaces entering the home and say handrails. Then you got tier 2, tier 3, and it goes all the way up to high physical support. And high physical support is when you literally need a crane above the bed to literally crane someone out Like you need like 70 grand's worth of machinery just in one room at the highest level. So when I make the claim that there were some silly buggers that started playing silly buggers, obviously when these tax incentives came out, then you had these investors come in here and think, oh, I know how to make a lot of money doing this. And then they would go and build these big kick-ass 10-bedroom with 10 high physical support, like rooms within this house. Like you're completely overcapitalizing, but I'm going to be able to make, 5 figures on that room, that room, that room, that room. And they're projecting making like hundreds of thousands of dollars per house in cash as an investor. Now, like all good things, supply and demand starts coming into the mix, right? So if, for example, we turn around tomorrow and because of the tax breaks that every single house is now an SDA house, well, now we've got too many SDA houses and all of a sudden the government's just going to remove the incentives because we've got too many houses now. The problem's been fixed and the problem's been solved, right? Kind of not what happened. What happened was there was these, silly buggers who went out there and built these 7-bedroom high physical support to get the highest amount of tax breaks. And when they tried to go and find 7 people to go and rent these houses out, you realize you can have a maximum of 2 people per house because there's now way too many conflicts. It's actually not workable to have 7 high physical support people living in one house. At best, you can have 2, right? So not only did people sort of overexploit this scheme, in the name of making more money for themselves and lining their own pockets, in other words, playing silly buggers, we've also got an immense amount of money being forked out by the taxpayer to go and fund this. So one of the hot button topics right now is essentially scrapping this policy and rewinding it all the way back. If that happens, I will foresee that there are going to be some bloods on the street. Sorry. Yep. There is going to be blood on the street. And that's essentially all of the investors who've been trying to play silly buggers, trying to soak up as much of these tax incentives and tax breaks. In other words, they've only bought the investments purely for the tax breaks. The second those tax breaks go, those investments are going to turn to shit, and there's going to be some people in some serious trouble, right? So that's the first thing that I can foresee coming. Secondly, again, guys, we got to remember this is a function of supply and demand. If we go and oversupply the house with SDA or oversupply the market with SDA homes, you've also got to consider that the returns organically will also start reducing, right? It's not like it's just going to stop at one day because the incentives, there's more people, there's more competition. Like your returns are going to get lower and lower because there's less people, right? This is a function of supply and demand. So again, this is something that I've been saying over the last 5 years. I remember going back pre-COVID, right? People were running around heads on fire trying to build a 7-bedroom, 10-bedroom, high physical support every room, talking about all these incentives. And today, you barely hear anyone talk about that because not only do they know it's not functional, but the returns themselves have also been diminishing because so many people have been getting to the market. So again, just to reiterate, the market is a function of supply and demand. Right, so that's the first NDIS policy that's looking like it might have an exit door, based on the fact that the Labor government has been mismanaging the budget. The second thing that I've seen in this article is talking about capital gains tax. Right, so for those who don't know about capital gains tax, basically what happens. Let's say you buy a house for $500,000 pre-COVID. Today it's worth $1 million. So you've made $500,000. Right now, I'm not going to get into the weeds of depreciation, sales costs, and stamp duties and shit like that. I'm just going to keep this real simple. You bought it for $500,000, cost you $500,000, and then let's just say you sell it today for $1 million. Now, what would otherwise happen in most other places around the world is you would pay capital gains tax on that $500,000 that you've made. In other words, you bought it for $500,000, you sold it for $1 million, you've made $500,000, you made that $500,000 today in 2026. That means that your taxable income has just increased by $500,000 this financial year. And you essentially pay income tax on the fact that $500,000 has been stuck on top of your income. So that's generally speaking how capital gains tax works. Very broadly speaking, speak to your accountant, not an accountant, that's how it works. Now, today they have a discount of 50% of capital gains if you hold the asset for more than 12 months. Now, the first question you probably want to pose is, well, why is that rule there in the first place? Why? Because it's designed to stop speculation. Now, keep in mind, guys, speculation is people essentially buying a house on the basis it's going to be worth more. They want to get in and get out of that. They don't give a shit about the effects or the pros and cons of what's going to happen to the market. All they want is just purely returns. I don't give a shit what happens. I want to buy at this point. I want to exit at this point. I'm going to make that sort of money, and I'm going to get in and out. That's speculation, right? In other words, you're taking some fairly big risk gambles and trying to get some really quick returns, quick profits, right? That law was designed to prevent speculation. So the idea is, if you hold the asset for more than 12 months and you're not just speculating, you're going to hold it as a long-term investor and actually you allow that asset to benefit society with more housing in the market. If you hold it for more than 12 months, your capital gains tax gets halved, basically 50%. So again, let's say you bought the house pre-COVID, 500 grand, you sell it today for $1 million. You've made $500,000. But because you've held it on for more than 12 months, instead of paying capital gains tax on 500, you're only paying tax on 250. So that 250 gets stacked on top of your income, and you pay now the overall tax on your income at that rate. All right, that's essentially how that works. Now, because of the mismanagement, what they're essentially talking about now is removing or changing or tweaking that discount. Again, I don't necessarily know if this is a good thing, right? And the reason why I say that, to be honest, guys, I'm not really too worried about capital gains tax for two reasons. Number one, I don't have any intention of ever selling any of my properties. Now, that may not be the case. I might sell them, right? In which case it's going to be a problem. But right now, my strategy is to accumulate as much as I can, never sell, and pass this all on to my kids and teach them how to do it and teach them how to maintain it, right? So for me, I'm not personally all that concerned when it comes to capital gains. Secondly, even if I did care about capital gains, I kind of don't, on the basis that I'm accepting the fact that I'm going to be paying a shitload of tax in my lifetime, and that's because I'm going to be making a shitload of money in my lifetime. So again, this is one of those conversations of, like, yes, to be clear, and just I want to reiterate this point for particularly the newer listeners. As an American who lives in Australia, right, and I'm an Australian as well, I've got an Australian citizen, right? As an American, my forefathers started and founded the United States of America because they were sick of paying a 2% tax to the crown. So just so you guys are aware, that's sort of my mindset when it comes to tax. I think the entire thing's a freaking scam. In fact, I personally believe that income tax is one of the greatest scams perpetrated on a country's citizens. Our country can run on bonds. There is no question, right? I mean, our tax system, in my mind, is the biggest scam in the freaking world, right? Now, knowing that in one hand, and notice how I still say to you, I'm still expecting to pay a shitload of tax the rest of my life because I'm going to make a shitload of money. In other words, if you want to become wealthy, be prepared to pay a shitload of tax. If you don't want to pay a shitload of tax, then stop making money. And look how that goes, right? So the second reason why I'm not too afraid of capital gains tax is because when the time comes that I start paying capital gains tax in the future, when I start liquidating my portfolio, if I ever do, just know I'm going to be liquidating dozens and dozens and dozens of properties, and millions and millions and millions will be liquidated. Yes, I'll be paying millions in tax, but I'll have millions and millions and millions of dollars left over. So guess what? Don't really give a shit, because it's better than working a freaking job and making $80,000 a year and hoping and wishing for something more, right? So once again, guys, just to reiterate, if you want to become wealthy, if you want to have a lot of money in the future, get used to paying tax. It's part of the game. Yes, this 50% discount is actually pretty bloody good, and I like it. And when they take that out, it's probably going to incentivize a lot of people not to sell assets. They're just going to continue hoarding. But the reality is, this is all on the basis that instead of paying all these investors all this, all these tax breaks, with money they're not paying capital gains because of this 50% discount, in theory, it's going to help save, budget and balance the budget, which I'm not really sure if that's actually going to work. In fact, I don't think it's going to work at all. In fact, all I really can foresee is just people holding onto massive portfolios and never selling, because while they sell, they're going to pay so much tax. Now, with all that said, guys, like I said, that's the update of the trends, updates for 2026 with a couple of forecasts thrown in. Just to be clear, if you are someone who is in the market, you're going to become very wealthy this year, right? I can predict, or I can foresee that the median house price in Perth hits $1 million this year, right? It's going to well and truly punch $1 million. If you are one of those people who is still sitting on the sidelines, my advice for you is to get into the market as soon as you can. Now, just to be clear, I obviously know when I say that, the first thing you're probably thinking, oh, but Corey, you've got a bias because you run a property company and obviously you're saying that so you can make more money. Sure. Like, let's put that to the side. In fact, don't even work with us, all right? Like, do this. You can do this yourself. Work with our competitors. Work with somebody. But guys, if you are sitting on the sidelines, get into the market as soon as you can. The market is not slowing down. The leading indicators, population growth, housing supply, like the numbers are not making the future look better. The numbers right now, the leading indicators are showing that the lagging indicators is property prices are going to continue flying out of control. And it's not going to slow down. I don't think it's going to slow down this year. I mean, there's just zero signs it's going to slow down the next 2 years with the way things are going. Now, again, if you're one of those people who is waiting for a crash, just know that in Australia, we have never actually experienced a property crash, which means that you're waiting for something that's actually never happened, right? In other words, just understand that plan is kind of insane, right? If you're going to sit there and wait for a crash. If you're waiting for the market to drop, the market, I don't believe, will be dropping in the next couple of years, right? It's only going to be increasing and going up in value. And by the time that it finishes getting to the peak of the market, by the time that it drops, right? And let's say it does drop, 10, 15%, it's way above where we are today. So you're still going to make money by getting in today, right? So my one and real, truly only advice, don't even work with us, guys. Take the bias out of the equation. Get into the market as soon as you can. Do it safely, do it smart, do it well. Hold on to the properties because you're going to make a lot of money in 2026. That's it for today, guys. Hope you enjoyed it. Please pass on some questions and some comments, and we'll see you guys next week. Thanks for listening.